Hi everybody, it's Wednesday, October 1st, 2025. We'll start with our headline, ADP Employment Negative and Negative Revision. Typically, the ADP numbers are taken with a grain of salt, but with all of the government data coming out with such big revisions, some people are starting to wonder if we should rely on these numbers more. They were able to release these numbers today because the ADP is a private entity funded by businesses that helps keep track of the employment situation. And for September, there was expected by markets to have a positive 45,000 jobs, and we actually lost 32,000. They also revised August from plus 54,000 to negative 3,000. And this was after August was already, when that report came out, it was expected to be at 68. And so the actual was 54, and now it's negative 3. And I'm kind of wondering if the September report may even be revised lower, seeing all of this negative revision. Now, the ADP employment numbers have only been around since 2010, so we didn't really see what they looked like going into the great financial crisis. But, comparing it to other data, other employment data, once we start seeing multiple months in a row going negative, that's like, okay, yeah, there's a higher possibility of us actually going into a legitimate recession. After all, in March of 2023, we had a negative 53,000, which was kind of a one-off. Then we were positive, we were rising, and then really ever since October 2024, this has been going down, 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 down. We had our first negative 23,000 in June, and we had a positive 104,000 in July. Again, this was supposed to drop in August. The expected was 68, and now is revised from 54 all the way down to negative 3,000 in September. It's coming out as negative 32,000 for now. And like I'm saying again, what if this gets even revised lower? These numbers can't just keep going down and down and down without a recession. Second headline today, government shutdowns irrelevant. At least for markets, from my perspective. I've been purposefully ignoring this subject because of the fact that it is irrelevant, but I can't help bring up the hilarity of the situation when one day markets are fearing, or maybe it was early this morning when, when the futures were down. I was seeing headlines saying that, markets are fearful of a government shutdown, and then CNBC on their front page right now, they have two headlines. S&P 500 closes above 6,700 for the first time as traders bet on short-lived shutdown. So it went up because they're betting it's short-lived shutdown. Yet on their same front page, they also have this headline saying prediction markets see government shutdown lasting nearly 2 weeks. So which is it? Neither, because it's irrelevant other than how the data not coming out starting tomorrow, it's not just the unemployment report that's not going to be released on Friday now. We also have the initial continued jobless claims not coming out on Thursday. I think the way that I'm going to interpret this is that with the stock market going up today, the big boys love higher prices to have exit liquidity. And so without this data coming out later this week, well, why not drive the markets higher? There were some pretty wild things in charts, and we'll get there soon. Before we get there, community topics. The community topic today, assuming the AI bubble pops, how high will the SPX go before it pops? I'm curious to hear what you think in the comments below. Are we at the level right now? Are we going to go higher? Are we going to go a little higher? Are we going to go much higher? I'm curious about your thoughts. Please comment below. And thank you for sharing yesterday's show comments, what type of trader or investor you were. It's really nice getting to know you guys as my audience. So besides coming up, no initial continued claims and no employment report, we still have tariff updates. Don't forget about those. Thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the crystal ball ratings. And see my website, link in the description, to read through my daily reminders, macro views explained, portfolio explained, and stock research center, with updates coming soon. Well, there's no other way to put it. The S&P 500 closed at a new all-time high today. Part of this, I'm going to assume, is short squeezing. After all, typically after, you have the quarter end, you have the ending of the window dressing. And with this government shutdown news, maybe too many people were short, and that's what drove markets higher. Not exactly sure. It wasn't the majority of stocks that went up today, as we had the advanced decline line actually tick down. So the bigger names lifted it up, including tech, as we got a new all-time closing high as well in the Qs, and an even more pronounced rise in the semiconductor industry, SMH ETF rising 2.25% today. Wow. The Russell 2000 IWM ETF also rose today, but a lot less than the other indices, and notably not getting to all-time highs. I also thought it was interesting and wanted to share that XLP Consumer Staples is nowhere near all-time highs, in fact quite low, which is a little bit concerning, especially when you line it up against XLU utilities going up. So in other words, people are probably going to still have to pay their electric bill and their gas bill, but aren't going to be buying as much food and other consumer staples. I'm rating this as a bit of a concerning sign. Next, Bitcoin amazingly kissing my trend line that I've had on here for a long time now, exactly to a T. Amazing how these trend lines work. To share exactly where that line is from, it's the exact high of December 2017, lined up with the exact high in November of 2021. Some of these other ones poke above it. I used that one because it was the next major pivot high that then had a 77% correction. That's why I use that one. That line has been such a psychological line, meeting up almost exactly to the exact high in December of 2024 and January of 2025. And although we've been cracking through it in July and August, on a daily basis, it has been acting actually as a resistance point, as we hit it basically on September 18th and now again today. So can Bitcoin get through this orange line here back to, these other highs, the ultimate highs that we've had? Are we having one last run of Bitcoin up to there, or is this it? Is this the top? It'll be very interesting to see. This is an important time to also mention that Bitcoin has been acting as a bellwether of the stock market. And if Bitcoin is unable to get to all-time highs, the stock market is likely to follow Bitcoin, unfortunately, to the downside. Next up, crude oil. We hit the bottom line again. How many times have I brought this up on the show? We're just ping-ponging between these levels around $61 and $65. And as I've been saying on many shows, this is a good thing. For crude oil to go flat, that's good. If we break to the downside, that's the market saying, yep, we're falling apart. And if we break to the upside, it's putting the squeeze on Americans and businesses alike, rising the chance of recession. So if it's going down, then we're already going into a recession. If it goes up, it raises the chances of going into a recession. As long as we stay in this zone here, things can continue, I think, with at least some level of orderliness in markets. The 10-year Treasury note yield dropped pretty good today, losing 5 basis points. It appears that this run up is looking like it is a blow off top. I am expecting the 10-year note yield to be dropping back to 4% and probably lower, but that's a crystal ball reading. If the unemployment report, when it's finally released, comes out and confirms what we just saw in the ADP employment report coming out today, it's highly probable in that case, in my opinion, that we will be driving below 4%. But we'll get there when we get there. We also had the 2-year Treasury note yield dropped by 8 basis points today. And, this is another way of checking the Fed funds futures. Like, instead of bothering to look at the CME group or investing.com and go through all their graphs, just look at the 2 year, because this is pricing in, if there's higher chances of more cuts or less cuts. Just look at the 2 year. So this is saying today's market action said, yeah, we're expecting a little more cuts. I mean, that's expected with the ADP numbers coming out so weak today. Next, I want to bring up HYG divided by SHI. Interestingly, dropping today, not by a ton, but it's a little concerning when the stock market and Bitcoin and all these risk assets are going up. And the credit markets are saying, when the spreads are widening a little bit, that can be one of those leading things that says, should we really believe this run up in stocks, alongside the advanced decline line not ticking up either. In the last chart of the day, I believe we hit a new low today in the S&P 500 dividend yield. Again, this updates, I believe, a day behind, so it's probably even smaller than that, but 1.15% in the past 150 years. Stocks have never paid the investors less money. Modern investment theory says, okay, yeah, but good companies, they reinvest the money in order to make more money. And my response always is, okay, to what end? And I don't think it's healthy for investors to rely on other investors to buy their stock from them at a desired price, so much that companies are refusing to pay anything out. But besides that, we have, even in the past 50 years, we'll call it, we've never seen it this low at 1.15%, besides the dot-com bubble, which got to an ultimate low of 1.11%. So we're not quite there yet, but we're getting closer and closer to that epic dot-com bubble valuation of stocks of the S&P 500 only paying at 1.11%. And quick reminder, this is also in an environment where Treasury yields, guaranteed yields, have not been as high as they are for 15 years. This is a big reason why I have so much of my own portfolio in longer dated treasuries. I believe yields are prepped to fall. Stocks don't seem safe when they're yielding 1.15% and guaranteed treasuries are yielding around 4%. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching and see you next time. Robschild.